Hello everyone, welcome back to my channel. So this video will wrap up the week number 9 of our Road to 200k challenge. And for starters, I must say that this video will probably take a little bit longer than usual because we have a lot of things to talk about. This was an absolutely crazy week, especially from Tuesday onwards. The market, the stock market went absolutely bonkers, and so because of that, we have a lot of things to discuss. I'm going to give you an overview on how the week ended up evolving and what are the trades that took place over the week. Because over this week, given the way the market evolved, we did a little bit more trades during the week that we usually do, and so we're going to have to discuss those as well. But just to give you a brief overview, after the last video, which marked the start of week 9 of this challenge, on Tuesday, most stocks rallied during the day and rallied very strongly. And so what happened was that as a result of that, and coming back here to our trade statement, you can see, and this is where it started the trades that I did over the week, because most stocks rallied during the day, especially Estée Lauder and Lyft, for example. This allowed me to sell some calls on these stocks. And why is that? Once again, because when the stock prices rise, call options become more valuable, and because previously the calls that matched the price of acquisition of these stocks were not available because stock prices rose during the day of Tuesday, these options became available. Although, of course, and as you can see right here, these are 2-week options, but nonetheless, it's not a big deal. For me, is the important thing is that I have the opportunity to sell these stocks, at least break even on capital, on the price, at some point in the future over the next few days. And so this is the most important thing for me. As you can see right here, the Estée Lauder call options have a 98 strike, and currently the stock actually breached 100 over the week, but then yesterday on Friday had a slight pullback, and so now it stands at 99.91. So these calls, which still remain here, are in the money, and so let's hope it stays that way. Just for you to understand, Estée Lauder starting the week at around $85, and so it went through a really strong rally over this week. But moving on to Wednesday, basically, I think the main focal point is that four motor company shares tanked. They crashed over 4%, simply because a Morgan Stanley analyst downgraded the stock and lowered its price targets. And so at that point on Wednesday, the stock came to our strike price, which at the time on our put options, which was $10.50, and so at some point it went at 1040, yes, but over the rest of the week the stock recovered, and so those particular put options expired worthless, and as you can see right here, these expired worthless, so no value was available for the option for the put buyer, and so we simply collected the premium in its entirety without having to buy anything. Nonetheless, and as far as the other stocks are concerned, some stocks continue to rise, and because of that, I took the opportunity basically to buy back some puts, which ended up becoming worthless. In this case, the American Airlines puts and the Lyft puts, as you can see right here. And again, I use this collateral to sell additional puts on Pfizer, and also because, as I mentioned, the stock, the Ford Motor Company stock tanked. I felt, all right, this may be an opportunity for me to buy a bunch of stocks on Ford Motor Company in order to lower our average price. And so I went ahead and basically piled up put options. I sold 11 contracts, 11 put options on Ford with a $10 strike price, just to see if I could get them assigned, and I would buy the stocks at $10, which would significantly lower our average price. However, as you can see right here, this also did not come to fruition because the options expire worthless. I collected the premium in its entirety and ended up not buying anything because the stock ended the week at 10.77, so it didn't hit it didn't remain below the strike price, and so nothing happened afterwards. On Thursday, and this was a very, very big day because basically the market went absolutely ballistic. Stocks rallied basically due to strong data on the US economy. Namely, jobless claims, durable goods orders all came relatively good and beating expectations by quite a margin. And also, and this was a very, very big news, the news that China plans to further stimulate the economy with money injections, also lowering interest rates. And that it was the main catalyst for the Estée Lauder stocks having basically skyrocketed from 85, 87, 88 to 100 and plus, because Estée Lauder has a large exposure to China. And so because of that, the put that I had sold initially on Estée Lauder with the 83 put strike, 83 strike, basically end up becoming worthless. And now the calls that I sold on Estée Lauder, which will expire next week, now are in the money. And so that's how it is. Just for you to give an idea on how crazy the day was, Estée Lauder was up 3.7% during the pre-market negotiation session. So this was actually not open. The market was not open yet. And then during the day, already the market was open. At one point, it was climbing 8.8%, which is absolutely crazy, especially for a stock with a price which is not a micro stock with a very, very small price. This is a significant price for a stock, 83 on absolute terms, and so to be able to rally 8.8% at one point, it's significant. And also American Airlines, which usually it is a bit dormant in terms of volatility. It finished the day 7.2% up, and so the market sentiment, we might as well say that went from absolutely depressive a few weeks ago to absolutely bonkers, basically. And yesterday, on Friday, there was, of course, some corrections. As you can see right here, the market adjusted a little bit its expectations, but still, this did not jeopardize our position in terms of selling the HIMS stock that we still had left. As you can see right here, we managed to sell the remaining stocks that we had on HIMS at 16.5. Currently the stock price is around 17.70, if I'm not mistaken. We can have a look very quickly just for you to see. Now you can see, all right, 1761. So Of course, you may say, oh, but if you had put the stock price, the strike price a little bit higher, you would still have sold the stock and realized a larger gain. Yes, true, but this is something that you can never predict. It's going to happen. And when the time came for me to sell these calls on Lyft, the market, the stock price was at around 16.5, which was exactly what I wanted, and so I decided, all right, I'm not taking any chances. Let's just sell at this price. I have a small capital gain and still get rid of the stocks, which was exactly what I wanted. And so basically this is how it went for the week. Now it's time for us to add these trades and their outcomes to our scoreboard. By the way, not before, one tiny detail that I need to mention, as you can see right here, the CMCSA stock that I held, and which I bought for 40.50, I managed to sell them at 41. So my bet on setting the strike price a little bit higher ended up going okay. We managed to get also a small profit in here because we got 50 cents on each stock, 100 stocks, so it's exactly $50 in capital gain, which is also very nice for us. But yeah, let's put this in our scoreboard, and so let's look for the trades ever since Tuesday, which are right here. Yeah, these are the calls for SLOD and Lyft in here. And so let's go into our scoreboard in here. And so this is on September 24th. In here we have to put the maturity of the SLOD calls, which is October the 4th, so 1 week from now. Here it is. This has the formula right here. This is SLOD. This is a covered call trade, and the strike price is 98, and these are 6 options. All right, I'm gonna have to basically copy this formula right here, even though the result is the same, because we are trying to break even on the price and get rid of the stock basically, right? So this is it. The premium, as I remember, was 30 cents each, and let's see what the commissions are. Actually, we had a credit, which is also nice, 1.76, which is always something that we can never complain about. All right, and as you can see, we cannot put anything in here yet because the option is still live. Now, moving on to the next one, and these are the calls on Lyft. Same thing. These are 2-week call options. The Lyft is stock. All right, so this is a covered call. The strike price is the same as the one that we bought the stock, so we are aiming to break even. These are 5. All right, so and then the premium. Let's see the premium. The premiums are, all right, 8 cents each, and the commissions are 167 plus 111. This is 278. All right, with 8 cents premium. All right, 8 cents premium and 278. I will have to adjust this formula right here because even though this will be exactly the collateral, the formula is a little bit different, but I will change this once the video is over because I don't want to bother you with this small technicality. All right, so moving on to the next day, so Wednesday, which was the beginning of some of the trend that ended up basically, yeah, it was not the beginning, but the continuation of the trend, the upward trend that the market went for most of the week. And so basically, you can see here that we sold 3 contracts on 4, all right, and we had a small credit, as you can see here. So let's put this in our scoreboard. Let's copy this here. This is actually 1 week call. This was 4. This is a cash covered put. The strike was 10, 3 contracts, and the premium was very low, but I did this trade. I wanted to do this trade because I felt that, alright, stock came down 4%, perhaps we will be able to basically buy it at a much lower price. So yeah, basically did not come into fruition, but it's okay. There will be other opportunities later. So the premium was 2%, so were 2 cents, and we had a credit of 27 cents, so nothing to complain about. And then we also did some buying back of stocks, of puts rather. So we bought the put we had on Lyft, right, and we paid 212. So let's see where the puts are. They are here, right? So we bought back at 1 cent. I believe that the fees were 272 or 212. Yes, 212 here, right? So 212, and we closed this trade. And we also closed this trade here on the American Airlines. So closed. Let's see what is the commission we paid for it. We paid a half tier 1, 334, but keep in mind these are 11 contracts, so it's normal that it costs a little bit more. Nonetheless, as you can see, these trades here, and I assume all it takes is to drag this. Actually, not sure what. Oh yeah, my bad. Yeah, this is actually correct. The only problem is that I failed to put in the date of the trade. So the trade is here and the trade here. Right, so let's see. Actually, as you can see, these are pretty good returns on an annualized basis, because basically we got this profit over 2 days. So yeah, on an annualized terms, this is very good. And so we follow this up with 3 puts on Pfizer here, as you can see, and also we added up more puts on 4, as you can see right here. So let's adjust this trade on 4. Instead of 3, it's 14, because this is the same put. And we also, let's see, what are the premium? The premium, I believe it must be the same. Yes. And then we had to pay a fee of 326. All right. So we had a credit here of 27, 326 here. So basically, we are going to adjust this to 299 instead of a credit. We had to pay 299 overall. All right. So, and then now let's continue on, because we had to input our Pfizer trade, the 3 contracts that we sold on Pfizer. Let's see. This was a cash covered put. I believe the strike was 29, if I'm not mistaken. Let's see. The strike actually was 28.5 with a premium of 8 cents. All right, so 28.5. So 3 contracts. So 8 cents, and the fees were 74 cents. All right, so 74 cents. Here it is. And by the way, we can also already put this in here, because we know that this option expired worthless, because we don't have to buy anything. All right, so we can already close this trade right here. And as you can see, this not as good return, but still I would say very reasonable. All right, and by the way, we can also close this trade right here, because we ended up not having to buy any for motor company shares. Again, of course, this return is even lower because of the low premium, but again, my intention was not to maximize the return, otherwise I would have sold puts on other stock, but for me, I saw that as a potential opportunity to to buy more Ford Motor Company stock to lower the average price, because that is our main goal for this campaign, is to try to get rid of the Ford stock at least breaking even. And by the way, I just mentioned before that we also managed to get rid of the CMCSA stock that we had, and we managed to have a small capital gain. So these shares were assigned, all right, and let's just put this in green here, because this is the moment in which we sold this stock right here, all right. And one very important point, and this is going to be probably the first time that this happened, is that because I had a small capital gain, first of all, the trade of the covered call itself, as you can see, was quite good, but we also have a capital gain to account for. And so what we are going to do basically is to let's see how this is. So because basically this loss will no longer be like that, all right. So let's just see what I did in other occasions. Yeah, basically this is it. So we ended up not having to, let's see, yeah, this is exactly how it is. We managed to get a sign here, and yeah, we did not have to do anything, all right, because basically what we did is basically to put this at 0, because this is a mark-to-market value. We ended up not having this loss anymore, all right. So this comes into 0. Let's just put here this 0 to make in green, to make sure that we keep track that we make a change here. And in here, and this is very important, you can see right here that we had the price at which we bought the shares, right? So now I'm going to open another parenthesis here, and let's add here the price at which I sold the shares, and the price at which I sold the shares is right here. So we, in this way, we will account for the small capital gain that we had, all right? And now this is this will be the result of the wheel. Let's delete this denominator, because this tells us what would be the loss per stock, or how much I would have to recoup per stock. But as you can see right here, this was actually our return by turning the wheel completely, all right. And so not only that, and this is something that I need to add here, because as you can see, we have here the capital gain, right, times 100, because these were 100 shares and this was only one contract. And we had also the premium from this cash covered put, and we also had to subtract the commission, which is right here. But now we have as well to add the result of this call right here. And so because of that, as you can see, we will have this result, and this result is the sum of the 1094 plus the 2794 plus the $50 capital gain that we had by turning the wheel, meaning by buying at $40.50 and selling at 41. And so this is the overall result. And I'm going to add a little comment here, because this is something that I already did before. As you can see here, let's just, for example, yeah, we can copy this one, not a problem. All right, and so at this particular stage, we sold the 100 shares, and the wheel was done with a $50 50 USD capital gain, which it always looks good and sounds good to say that, and as well the sum of 1094 and 2794. All right, and so as you can see, this is 37, 38, so it's 38.88 US dollars of profit just from the premiums. And so this is what happened, and let's put here our comments to make sure we keep track of everything we did and make sure that this is a proper track record. All right, and so this is what happened. Now again, coming back to here, our trade statement, this is what we've done already. Again, we proceed now to Thursday, and on Thursday we sold also a put on Bristol-Myers Squibb, as you can see here. So let's add this to our scoreboard. So let's see, let's say it here. Oh, this was a mistake, right? So we copy this, and as well, because this is something that ended up in well for us, because the puts were expired worthless. All right, so we don't have to commit to buy anything. All right, and so this ended up being worthless, 36 cents, 106, and as you can see here, they expired worthless. All right, so basically there was nothing to worry about. This ended up being okay. I'm not going to add more to here because the date of the buying was different, so these will have different returns. All right, so this was a 36, and let's see, 36 with 106 of commission, and both of these expire worthless, so we keep all the premiums. And again, let's copy here for Bristol-Myers Squibb, and this is also 0 because we didn't pay anything. All right, and this is it. As you can see, the returns are much different because the timing of the puts being sold was completely different, and also the premiums were different. And so because of that, we have a very different set of returns. But again, as you can see, this is a very good return for this particular put option on an annualized terms, of course. Now, this put on Estilode also expired worthless because there are no more trades for here. And yeah, this is basically the put that we sold. So we move on. Now, Estilode put expire worthless, so this trade finished as we don't mind do it, because at the time I wanted to try to lower a bit the average price, but again, it's no longer necessary as long as the stock keeps its current price or somewhere close to that, because that will allow us to finish our wheel in terms of holding the Estilode stock, and so we will be able to get rid of the stock without a capital loss. As you can see here, the premium, the return was nice, was good, but of course our focal point is to try to get rid of the stock as much as we can. And again, this expired worthless. Now the big one, because I see already in here the stock was assigned, the call options on HIMS were assigned, as you can see, and I had to sell them at 16.5. all right, and so this will be something that we need also to account for. By the way, let's just put this without color because these CMCA stocks are already gone, so the wheel has been turned, so we have no more to worry about. And so now we have to get rid of these stocks. As you can see here, this mark-to-market loss that we had no longer is the case, because we do not have any capital losses, all right, and this was marked to market, so it's no longer relevant. Now this is, let's see, by the way, just for you to see, I would break even on this stock if I would sell them at 13.78, and I sold for 16.5, so I have a capital gain in here, but since I had a capital loss on the other 1400 shares that I kept, now I will offset that loss and ended up with a small capital gain. As you can see here, this is by how much the stock was bought, and so now I'm going to add the strike price of the call which was assigned, which is right here. All right, so times the number of contracts times 100, and then we have the J205, we have the premium, the premium we receive plus the number of times the number of contracts times 100 minus the commission, which is K205, plus also the 206, which is the premium that I received from this covered call, which you can see right now because it's covered by this formula, but nonetheless it's good. And now we need to add also in this case the premium that we will receive from here, all right, which is going to be at this formula, but it will show in a minute. And then let's delete this denominator, which would tell us the number, basically what I deleted is the number of stocks that we had, so we could get the loss, or how much would we have to recover by stock. Now I want the absolute number. So as you can see, there is a value here because I haven't filled yet the date and the rest of the information for this particular trade, but this trade expired here, so nothing more to add in here. It's 0 because we didn't pay anything. The shares were assigned, all right, and now you can see that this gave us this profit right here, 2,456 euros and 7 cents. And now if I'm going to show you, because why this trade was profitable, and as you can see right here, let's see, so this is 2456.07, right? Now let's add also this bundle of shares that we sold on HIMS plus 1417.88, and now we're going to have to subtract the losses that we suffered before, which are here. So yeah, this is it. As you can see here, this 269.96, so we have to subtract this 69.96, and also this loss right here, 1462.09, and so we ended up with this gain. All right, now keep in mind in here there is capital gains and earnings from premiums. So because I want to be as clear as possible about this, I want to make sure that I leave in the comments all the information for you to understand what happened. And so this is where we sold most of the shares, the 1400 shares on HIMS, where I explain what happened in this particular trade. If you recall in a previous video, we had these losses on capital gains, and then we had this gain on capital gains in here, and then when we sum up with the premiums that we collected, we still had a loss of 314 euros. All right, so now what I'm going to say is that in here at this particular cell, right, what we are going to say is, let's copy this right here, right? Let's say that 800 shares were sold and the wheel was also partially done, all right, but with a capital gain of, let's see how much it was. Let's erase this because this is no longer the case, and we sold these, and these were actually bought at 14, these 800 shares, and you can see right here that these were bought at 14 here, as you can see. And so let's add here, all right, and these were 8 contracts. And so let's open another calculator in order not to lose what we did. And so this is let's see, for the parentheses, 16.5 minus 14, right, and times 100, because each contract has 100 shares, and times 8, right? So this was the capital gain that we got, all right? So this is a 2,000 capital gain, correct? As you can see here, 2,000, and let's put right here 2,000. Now, the total amount of premiums we collected, we can make this assumption right here, because now let's put this in here. Now this was the overall gain, all right? And now we have to keep in mind that let's see, so this is the overall, all right? And that, if you recall, the average price of acquisition of the shares was, and but I will do the calculation again right here. We no longer need this 2,000 information. So if you recall, I bought 3 contracts at 23.5, right, times 3 here, plus I bought 100 shares at 22.5, so this is times 1, so it doesn't really matter. Now I bought 10 contracts at 15.5, so 1,000 shares at 15.5, and I bought these 800 shares. Oh, sorry, this is not correct. Really? You're gonna I'm gonna have to do the calculation again. All right, so it's 93 plus 15.5 times 10. Close. Now open the parentheses again. 14 times 8. All right. This is it, and these are 2,200 shares, so I'm gonna have to divide by 22, and as you can see, the average price of the entire lot of shares that I had was 16.36. all right? And so now if we add the 16.5, this is how much we gain per stock. So we had a capital gain of 13.6 cents. So roughly, give or take, 14 cents per each stock. And so if we multiply this capital gain by the 2,200 shares that we initially had, we ended up with a capital gain of $300 overall. All right. And so now what I'm going to do is to say here, right, that the wheel was completely done with a capital gain of $300. All right, and why is that? Because this is, as you can see here, 16.36 times 22 contracts, and this is 300, right? Now, this is no longer relevant, right? I want to say how many we received in premiums, but let's see. And you can deduct how much was it, because if I have this entire gain, all right, overall I had this entire gain, as you can see, and now the capital gain overall was 1300. So if we deduct here the 1300, we had this amount in premiums collected. And so let's just copy, for example, from here. I would rather, yeah, let's do this. No, we can do this from here. Yes, I think it's good. Let's use this entire statement here. Let's do it like this. The total amount of premiums collected were this one. So 8,441. Sorry, this is it. And let's see, how much is it in cents? So 90 cents. All right, so 90 cents. All right. And so the overall result, sorry, because this is my mistake. This is not 3,000, this is 300. And the overall result was a gain of $2,141.90. All right, as you can see right here, because we ended up having these results from the previous one, and then we add up this result that we had, the 245607, and this is the exact result that we got over here. So this is it. Right, I'm trying to be transparent as possible with all of you guys, because I think this is also beyond my record keeping. It's important for you to understand that, all right, this is something that can be done, it is very profitable, and anyone can do it. All right, and this is something that is, I think, liberating and can help anyone in this regard, anyone who wants to start trading options in this context. All right, there is one small detail that I may be missing. No, it's correct, because this amount is also picking up the result of this particular covered call. So this is correct. All right, so this is done finally. All right, that's why this video is taking a little bit longer, but I think the intention is worth more than the time that it's taking, so it's not a problem. All right, so moving on from here, and I think now is all about wrapping up the rest of the trades, which are very, very straightforward. As you can see, also the Pfizer puts expire worthless. These 4 puts on $10 strike expire worthless. These 4 puts also expire worthless, so we can already wrap up these trades as well. Right, so as you can see right here, this expired worthless here, and what is remaining, yes, what is remaining basically is the 2 calls that we still have remaining, which will expire next week. All right, this is fairly good. As you can see, we are approaching this $10,000 mark in gain. Now keep in mind that this result is not accurate, because we still have some losses here, which are basically mark to market. So this basically will be offset when we sell the stock, so not a big concern about it. As you can see also here, this is also another mark to market loss, which will eventually be erased because it no longer makes sense to be here. But yes, overall this is a very good result. And as you can see here also, a few weeks ago we had unrealized losses of over $12,000, and so now it has recovered quite significantly. At some point during this week it was trading positively, but it was because some shares, for example HIMS, were trading much higher than the strike price, and so let's just say I had a loss in there because I sold at a price below the market price, but that's obvious because otherwise the call would not be exercised. But what does it matter is whether you gain or lose when you sell relative to the price you buy. And so far we managed to get out of all the trades at least breaking even, and sometimes with a small capital gain. And that is the way we are going to proceed always. All right, never realizing capital losses. And so basically this is it for now. Yeah, this was a very good weekend, or rather a very good week. Let's hope the momentum continues. And yeah, for the time being, that is all. We will reconvene at the beginning of week number 10 next Monday. For the time being, please leave your comments below. If I know this video was a little bit longer than usual, I understand you may have many questions about this. Please leave your questions below, either in the comments, or you can get in touch with me on LinkedIn. Also, feel free to like the video and subscribe to the channel. And yeah, we'll reconvene next Monday for week number 10. Until there, yeah, have a great weekend, guys, and see you all next time.